right, today we're going to go over Business Insurance 102. This is the second segment to our business insurance segment. We obviously did 101. This one we take a bit of a deeper dive. We go into employer practices liability, E.P.L.I, sometimes known as the Me Too insurance. We're going to go over workers' compensation, why that's important regardless of whether the state recommends it. We're going to go over also how they look at a 1099 versus a W-2. We're going to go over some big stats on cyber insurance, directors and officers, otherwise known as D&O, flood coverage, not just for the building but also as a tenant, and then why your personal insurance has to look different as a business owner. E.P.L.I, employer practices liability. This is a coverage a lot of business owners don't know they need. So E.P.L.I is an area of the United States labor law that deals with wrongful termination, sexual harassment, discrimination, evasion of privacy, false imprisonment, breach of contract, emotional distress, and wage and hour law violations. It may be categorized as a form of professional liability. Employment practices liability insurance is sold as a type of management liability insurance. Now let me be clear up front. This is the only coverage you have as a business owner between you and your employees. This is protection from your employees that would want to discriminate for sexual harassment, ageism, discrimination, etc. So when that suit would happen, the only actual coverage you have for that, again, this wouldn't fall under general liability. It's its own coverage. And a lot of companies don't have it. A lot of them are even unaware of its existence. It obviously came more prominent with the Me Too movement. Again, sometimes classified as the Me Too insurance coverage, this is a main protection between employer and employee. As a small business owner, here's what you need to know about E.P.L.I. E.P.L.I coverage typically ranges from $1 million to $25 million in coverage limits. Depending on how it's written, an E.P.L.I policy may also cover state and local laws that attempt to address workplace practice issues. Most E.P.L.I policies include a deductible. Once that is met, policies cover the cost of your legal defense, along with the cost of judgments and settlements up to your coverage limit. Employment laws are unusual in that employers, if they lose a case, are usually required to pay the cost of employees' legal fees as well. The cost of your E.P.L.I coverage will be based on, again, type, size, risk profile of your business. As part of this determination, insurance companies may ask to see your written personnel policies to help them assess your potential for risk. Again, so let me say this while we're here. Most businesses don't have a human resources HR department because most small businesses can't afford to have one, sometimes full-time, little, or on the fractional side. So the problem with what E.P.L.I wants to determine is, do you even have any agreements between employer and employee? It's similar like having a contract in place between a business to business. You need to stipulate certain outlines in there because the more you can be clear up front in your employment contract, the better this will serve you on whether it's going to pay or not. So an E.P.L.I policy usually doesn't cover criminal conduct, fines, civil fines, penalties, and punitive damages. E.P.L.I also excludes coverage for claims covered by other insurance policies, including property damage and physical injury. Those would fall under GL and BPP, as we discussed in 101. Some directors and officers policies may include E.P.L.I coverage, but this may be limited to your company's directors and officers and leave your company vulnerable to litigation directed at other company employees. If an E.P.L.I claim is to be covered, it must be reported to the insurance company while the policy is in effect or within a period explicitly outlined by the policy. Additionally, the event that gives rise to the employee claim must have occurred on or after the start date of the policy. Some insurers may offer retroactive dates. There's also retroactive dates when it comes to professional liability as well. It's important once you have a retroactive date, that means the date in which your company signed up for a policy, that is honored on every policy. So if you switch carriers in the middle of the year, they need to add that retroactive date to that policy to cover that, as well as tail coverage. E.P.L.I game plan. Make it a point to discuss the appropriate E.P.L.I coverages for your business with your insurance professional. This conversation should serve as a great starting point for helping you find out what state and local employment laws you will also need to comply with. Again, you're going to have state and local laws. You're also going to want to have your own employee agreement, such as do not competes, all of these other things in that language. Insurance should always be the last thing that you need. To make it harder for a suit to happen. Many policies will specify that the insurer has the option to choose your legal representation should a claim arise. If you're not comfortable with that, you may want to shop around for a policy that takes your preferences into account. E.P.L.I examples. Hostile work environment. An airline pilot claimed that there were derogatory statements posted by coworkers on the crew members forum. Wrongful termination, sexual harassment, retaliation, false representations. Other E.P.L.I. claim examples covered are breach of an employment contract, which is why you want one to begin with, negligent evaluation, failure to employ or promote, that could even be ageism or sexism, wrongful discipline, deprivation of career opportunity, wrongful infliction of emotional distress, and mismanagement of employee benefit plans. All those are suits that could be an E.P.L.I. claim, and again, without E.P.L.I. insurance, you're literally on the hook for those expenses should you be found liable. Workers' compensation insurance. What is work comp? Workers' compensation insurance, also known as workman's comp, provides benefits to employees who get injured or sick from a work-related cause. It also includes disability benefits, missed wage replacement, and death benefits. Workers' comp also reduces your liability for work-related injuries and illness. Without coverage, your employees can sue you for a work-related injury or illness to help pay for their medical costs or lost wages. This is a very important tidbit here because a lot of states, Texas being a large one, they do not require you to carry work comp, whether you have 1099s or W-2s. But just because the state doesn't require it, again, doesn't mean you're not on the hook for any expense coming out of work-related injury or illness. And I assure you, workman's comp insurance is far less than the average health insurance deductible. Work comp's always the choice. Continued. Most states require businesses with employees to carry work compensation insurance. However, each state has different rules. So the state or states where you do business will determine your workers' comp insurance requirements. Again, look to the state for the requirements, but err on the side of caution of needing more insurance that's required. Again, like in Texas, work comp's not required. That's not a good example of why you should or shouldn't get it, to be honest. So what does workers' comp cover? If your employee suffers a work-related injury or illness, workers' compensation benefits can help cover their medical expenses, lost wages, ongoing care costs, funeral expenses. These work comp benefits aren't available if your employee gets hurt or sick outside of work. Benefits may also not be available for intoxicated employees that get into an accident or employees that intentionally hurt themselves. This again comes down to your employment contract. So similar out in the trades, construction trades. Most construction trades have in their employment contract that the moment you get injured as an employee, they will instantly take you to the hospital, but they'll also require you to take a drug test to make sure that you're clean. Otherwise, work comp won't apply at all. Now, if you don't have that in the written language, that wouldn't show up, but that's very important, even for offices, to have that written in your employee agreement, that in the event of a work comp related injury, whether that's, any way that could happen, that you're stating in here, yes, we will take you to the hospital, we will start providing care, but we will not file a work comp claim until after we do a drug test. Once that's fine, clear, we will proceed down that thing. It's very important to have that in the language, because if you don't, you could be on the hook for somebody being intoxicated that gets injured. You could still be on the hook for those expenses. So you want to spell that out clearly in your employment agreements. Missed wages. Workers' comp helps replace part of the employee's income if they need time off due to work-related injury or illness. For example, if a chef is injured and can't work for 2 weeks, work comp can cover some of their lost wages. Ongoing care. Some work-related injuries may need ongoing treatment. For instance, if a warehouse employee injures their back, work comp can cover ongoing care like physical therapy. Funeral cost. In the unfortunate event you lose an employee due to a work-related accident, workers' compensation can help cover funeral costs and provide death benefits to your employee's beneficiaries. Illness. Work conditions can expose employees to harmful chemicals or allergens. If they get sick from a work-related injury, work comp can help cover treatment and ongoing care. Disability. Severe work injuries can temporarily or permanently disable employees. Work comp helps cover medical bills and lost wages for disabled employees. If your foreman loses the use of his leg in a work-related accident and can't return to work, work comp can help cover medical costs and provide disability benefits to replace some of his lost wages. Who is covered by work comp? Several factors like specified roles and the size of your business determine which employees need workers' compensation coverage. Requirements can vary from state to state, but most require work compensation coverage for full-time employees. Some states have laws about workers' comp for contractors, temps, and interns. It's important to know what your state requires for work comp coverage. Now, let me be clear on this, and again, I'm not giving legal advice, but In the event that you have subcontractors, meaning they're 1099 employees versus W-2 employees, if your employment contract doesn't state that they are required to carry their own workers' compensation as a subcontractor, you could be found liable in the court of law. Most courts of law determine 1099 and W-2 to be an employee. The only differentiating factor there is the contract specifying we are not covering X, Y, and Z. You're to cover that on your own as you are a subcontractor. Again, even when it comes to part-time employees, it may not be required by the state, but I would assure you it's a good rule of thumb to get work comp. Even for office employees, it's nominal. But again, to get involved in a work-related accident, work comp is far less expensive in any case than paying out of pocket for someone to go to the hospital. Some states have a minimum number of employees to determine if a business needs workers' compensation insurance. These states are Alabama, Arkansas, Florida, Georgia, Mississippi, Missouri, New Mexico, North Carolina, Rhode Island, South Carolina, Virginia, Wisconsin. Again, even if they state that you would need minimal 3 full-time in order to provide work comp, I still think you should consider offering work comp. It's not like health insurance. Work comp is very inexpensive. It's obviously more expensive depending on the risk of work, like roofing. However, even though the work comp's more expensive due to its higher risk, you also have a higher risk of paying out of pocket in the event of. So work comp in any case. How does workers' comp claim process work? Workers' comp claim processes also vary from state to state. However, no matter where you're located, it's important to start the claim process as soon as possible after a work-related illness or injury occurs. Knowing the following requirements and insights can help you with this process. Most states have a time limit for when your employee can report a work comp injury to their manager. This is usually between 30 and 90 days. There may also be a time limit for when an employer can report a work comp injury to their insurance company. That is the one I would follow the most. Okay, because you don't want to be late reporting it if you want it to be covered under that policy. It's important you understand how the claims process works in your state and if there's any statutes of limitations for coverage, also how it works with the carrier that you have the insurance through. Make sure your injured or ill employees get immediate medical care. Your employee or the representative should notify you about the work-related injury or illness ASAP under every case. Cyber insurance. This is a big one. It's not if, it's when. What is cyber insurance? Cyber insurance, again, let me be clear, also not covered under general liability, because a lot of people think that it is. Cyber insurance is a specialty insurance product intended to protect your businesses from internet-based risks and more general from risk related to information technology, infrastructure, and activities. Risks of this nature are typically excluded from traditional commercial general liability policies, or at least not specifically defined in traditional insurance products, because cyber wasn't so big a few years back. And it's getting more robust because it has to be. Breaches are happening, as we'll get into some stats. Coverage provided by cyber insurance policies may include first-party coverage against losses, such as data deconstruction, extortion, theft, hacking, denial of service attacks. Liability coverage indemnifying companies for losses to others caused, for example, by errors and omissions, failure to safeguard data, or defamation and other benefits, including regulatory, security audit, post-incident public relations, and investigative expenses, and criminal reward funds. If you take credit card payments or store data on clients, any data, address data, ID data, social security numbers, date of birth, it's a must. It's not if you can get hacked, it's when. Nearly 4,000 new cyber attacks occur every day. Every 14 seconds, a company falls victim to a ransomware attack. Cyber insurance examples: social engineering. Fraudsters accessed a policyholder's email via business email compromise and sent fake payment instructions to a client, redirecting funds to their own account. They also accessed customers' personal identifiable information, requiring notifications to individuals and regulatories. I had a client who had this. Their company didn't get breached. Their website provider, GoDaddy, did, which then got into our client's system and then did this exact thing. Sent fake invoices under our client's company name and redirected them to a third-party account. Not only does this get messy on figuring out who's at fault, cyber can help investigate, audit, get attorneys involved, and the PR campaign, because once you have a breach, you do have to notify every client you've done business with, as well as monitor their credit if you were found that the breach happened on your account. A lost laptop. A thief stole an employee's employer-issued laptop from her locked car. Although password protected, the laptop wasn't encrypted, requiring the policyholder to notify clients and regulators in 3 states. The insured simply called the carrier hotline and legal professionals handled the rest. Again, There's a lot of people that can come to your rescue when you have a true cyber insurance policy. That's what it's built for, is to bring experts in to figure out how the breach happened or to negotiate with them to get data back, etc. But it's very costly, as we're going to get into, on what a breach looks like. Ransomware. A school district was hit by a ransomware attack, locking its servers and exfiltrating student data. The attackers demanded a ransom to prevent the release of student records on the dark web. Backup files were corrupted and forensic experts engaged with the attackers. The decryption key was obtained after a $200,000 ransom payment. Now, what would pay for that ransom payment? A cyber policy. Most businesses cannot even afford the $200,000 just for ransom, let alone some of the things that we're going to get into here. PCI breach, payment card industry. An e-commerce retailer suffered a form-jacking attack allowing cyber criminals to skim over 500 credit card numbers. The retailer had to notify individuals, state regulators, and respond to inquiries from credit card brands. This is a big one, even if you take credit card, folks, whether you're processing that through Stripe, Square, I don't care how you're processing it. Once you swipe the Visa, it's on you what happens to that. Once that number goes in the air, we know that they're easy to catch. And so if you take credit card payments without having cyber policy, because again, any of these payment processing services in your contract, they are not covering any of the risk of you using that device whatsoever. So very important to know that, as a lot of people are taking credit card payments. This is a big one here. Public guest Wi-Fi. They call this the man-in-the-middle attack. A business suffered a man-in-the-middle attack when hackers intercepted data over unsecured public Wi-Fi, stealing customer-sensitive information. The business had to notify affected individuals and regulators, and typically you got to monitor their credit for an entire year, while also addressing inquiries from cybersecurity authorities. Using public or guest Wi-Fi is dangerous for both your customers and your business. I'll use this example. We all know that Target got hacked years ago. Now, Target didn't have a breach. An HVAC company working on their air conditioning was on their Wi-Fi. That is how the breach happened, to give you an idea. But having guest Wi-Fi, if you have that as an offering where people come out to your office, you got to make sure that you're hard-lined in with your data over here, and your guest Wi-Fi is a totally separate internet. They can't be related, because if you're doing transactions at a bread co. As soon as you log onto their Wi-Fi, they let you know that it's unprotected. So they're not responsible for anything that can happen. Unprotected Wi-Fi is a big one for everybody. Whether you're at a third-party location or you're letting people use it at your office, there's a likelihood that someone can get into the system. Credit monitoring. Again, business experienced a data breach exposing customers' personal information. The business was required to provide credit monitoring to affected individuals and notify regulators and state authorities. Again, this happened just this past year with Delta Dental. It happened with Ticketmaster, I believe, was another big one. So anytime you get those notifications where they go, hey, we had a breach, by the way, we're going to offer free credit monitors. This happens all the time. But that's a huge expense to pay to monitor hundreds, if not thousands, of clients. Again, why cyber insurance is important. So top 10 cyber statistics. Ransomware hits every 10 seconds. So a business falls victim to ransomware every 10 seconds. Costs are skyrocketing. Global cybercrime will cost $10.5 trillion annually by 2025. Okay? And obviously we're at the tail end of 2024. So that's literally 5 days from now, roughly. Data breaches are expensive. The average cost of a data breach in the US right now is $4.8 million. I don't know, 86% of small businesses don't even make $250,000 a year. 86% of them. You can look that stat up. So $4.8 million, it's not going to happen. Their business likely wouldn't make $4.8 million in its history, let alone to be able to pay that for a breach. Again, cyber insurance, why it's important to have that policy. Healthcare, top target. Healthcare faces the most cyber attacks due to valuable personal health information. Email is the number one malware delivery method. 94% of malware is delivered by email. Again, Netflix fake emails, Apple iTunes fake emails, right? We're all getting these emails. These are an attempt at putting malware in your system to get access to what they're really looking for. Very important to know that. And again, can cyber be added to a BOP? The answer is yes. However, it's limited to about $250,000 maximum. A true cyber policy starts with $1 million in coverage. So by all definitions, a cyber policy is a standalone policy. Totally different. Small businesses often don't survive cyber attacks. 60% of small businesses close within 6 months of a cyber attack. Human error causes 95% of breaches. Why? Saved passwords, etc., etc. We all know what the deal is. Most breaches happen due to mistakes like weak passwords or falling for phishing scams. Again, Netflix, iTunes, to name a few of these fake scams we see most of around this time of year. Password reuse is dangerous. 59% of people reuse passwords across multiple accounts, making them vulnerable. Artificial intelligence is being weaponized. Cyber criminals are increasingly using AI to automate attacks, making them faster, more difficult to detect. Phishing is more sophisticated than ever. Over 75% of organizations experienced a phishing attack last year, with increasingly convincing tactics that fool every tech-savvy user. Phishing is a cyber attack where hackers trick people into sharing sensitive information like passwords or credit card numbers by pretending to be a trustworthy source. Again, Netflix, right? You're going to get shut down. You got to enter your password here. It's not Netflix, right? We've got to understand this. Now we're going to jump into D&O. Directors and officers coverage. What is D&O? D&O liability insurance is insurance coverage intended to protect individuals from personal losses if they are sued as a result of serving as a director or officer of a business or an organization. This can also cover legal fees and other costs an organization may incur as a result of a suit. So even volunteer roles for nonprofits, etc. This coverage is needed to protect yourself from legal situations that can arise from this paid or unpaid work. Even being on a school board, you need to make sure that they have D&O because you can be singled out and sued by somebody. And if you are not covered by the D&O on a board, paid or unpaid, there's no coverage. Very important to understand that because you can be personally sued even if you're on a volunteer role. D&O examples, the board's failure to adhere to bylaws. This could even be a subdivision HOA, folks. That's probably the best example of, where people are getting sued and everybody's upset is an HOA of a subdivision. But the board's failure to adhere to bylaws, the board's failure to properly notice elections, the board's failure to properly count votes and proxies, challenges by members regarding power granted to the board by bylaws, and improper removal of a board member. I have a friend of mine. Him and his wife were on a school board and she got singled out and was getting sued. Not the entire board, her. And she didn't even know the person in question, but it didn't matter. But the important by making sure that the school board has D&O, and you're listed on that, is there's coverage for that suit. Flood coverage. This is an important one because this is not added to any BOP, general liability, etc. Again, flood is always a standalone coverage. Flood insurance is specific insurance coverage issued against property loss from flooding. Right out of the gate, I'm going to explain flood versus backup of sewer or a pipe breaking. Flood is water outside in. Anything else, water coming up through the drain, that's backup of sewer and drain. If a pipe breaks, that's normal coverage. Flood is water outside in. So people always want to get that confused. Once only covered buildings and building owners, now flood is offered for contents and tenants alike. That's an important thing because a lot of people don't own the building that they're in, they lease it. And unfortunately, a few years ago, tenant flood was not an offering. Meaning that if the building flooded, the owner of the building had flood coverage. But you, the person that's leasing your space with all your stuff that's now wet, none of that was covered by their flood insurance, nor could you buy flood. Now you can buy contents flood coverage as a tenant. Super important to look into because every year a new county builds a new levee, somebody else gets the water. Flood maps change constantly every year. We've seen people that weren't in a flood zone for over 30 years that went completely underwater. We've done GoFundMes for clients who didn't have flood coverage before. Flood insurance examples. Generally, physical damage to your building or personal property directly caused by flood is covered on a flood policy. For example, damages caused by sewer backup, again, are covered by backup of sewer and drain. That's a normal coverage on most insurance policies, not to be mistaken by flood. Personal insurance as a business owner. This is a big one. We don't get too heavy into this as we have an entire library on personal insurance as well as business insurance on our university platform here. But we're going to delve into a bunch of things that most people don't know. Your personal insurance has to be different as a business owner. Your personal insurance needs to be built differently because most attorneys do not go after just the business itself. They go after the individual. Now, everyone always tells me, Chris, I got an LLC. You're named on the LLC, on the formation paperwork. So make sure that you have strong protection even with your personal insurance if the suit could go that way. Now, on the commercial umbrella piece that we went over on Business 101, we talked about how you have general liability, business personal property, professional liability, etc. You can get a commercial umbrella to go over all of those policies. Works the same way with your home and auto. However, you have to have certain limits to be able to purchase a personal umbrella. They did that because we would all buy state minimal and buy an umbrella, because umbrellas typically start at about 185 to 200 per million. But the problem with that is you have to have certain limits. So we'll go over these quickly. To the left here are Missouri state minimal limits. And trust me, folks, these are excessively low. This is the average in most states, and there's states that have even lower state minimal than this. But those limits are 25, 50, 25. That means the policy covers $25,000 in bodily injury per person, no more than $50,000 in bodily injury per accident. That last number, which I deem the most important, is property damage. What you hit. We know that 80% of fender benders are not fatal. So the average car on the road now, folks, is $57,000. So if you only have $25,000, where's the rest of that money going to come from? Out of your pocket, which is why it's important to have an umbrella. Now, to get an umbrella, you have to have either of these two auto limits below. You have to have what they consider top tier limits, which would be 250, 500, 100, meaning you're covered for $250,000 in bodily injury per person, a max of $500,000 in bodily injury per accident, and $100,000 in property damage. Now we know if you had a Tesla or a Porsche 911, you still probably don't have enough property damage, but that's where the umbrella comes in. You buy an extra $1 million, $2 million, $3 million, $5 million, $10 million, doesn't matter. That then comes into play there. Similarly, with your home, it goes over your home's personal liability. If you have people come over to a pool and a kid drowns or somebody gets injured, slip and fall, and the liability of your home doesn't cover enough, that umbrella comes in. And as a business owner, people will make an example out of you. Trust me, it's called low-hanging fruit in the insurance industry. All right, lastly, you shouldn't have your business insurance with a personal insurance carrier. So here's what a lot of people don't know. There's a lot of carriers, we're not going to name them, but they're personal insurance carriers. These typically are where you have your home and auto. They are not commercially designed to do insurance. How do you know this? A real commercial policy will show your class code. So med spa, it will say class code, da-da-da-da-da, right? It will say that. When you're doing business insurance with a personal carrier, it just says business insurance. It doesn't say a class code. It's not real, and it doesn't cover. You can't get E.P.L.I. You can't get a lot of these coverages we're talking about. So you should never have personal insurance, business insurance with a personal carrier. The other reason is, once you set up your LLC, it should only be in the name in that LLC. And a lot of personal insurance carriers have to list your first and last name, then the LLC is an additional insured. That's dangerous because now that's a direct personal suit. It will also affect your personal home and auto insurance if you make a business claim because it's all with a personal carrier. Why you shouldn't have your building insurance with a personal insurance carrier? Same reason. If you go out and buy a building, you're renting it to other people, it's in an LLC. If it's with a personal carrier, though, that has your name on it and the name of the LLC, if you have a roof claim for hail, your home and auto insurance goes up. Well, why does it go up? Because it's under personal insurance. It's using your personal insurance score, not your business score, which is why it's important to have real business insurance with a real commercial carrier. Why it truly needs to be in the LLC and not as an additional insured. Because if your name is on a policy, you can be sued personally. The difference is you want your policy, the named insured should be the name of your LLC or your S Corp or whatever you have. Your personal name should never be on there. You should never be named and then the business is an additional insured. The business should be the named insured, period. Very important distinction there in the event of a lawsuit. If you have investment properties that are also with personal insurance carriers, when by definition, a rental, a landlord dwelling is a commercial, it is business because it's a income producing property, which means it should be on a commercial form. So if you have your rentals with a personal carrier, here's how you'll know that. You'll look at the form, it will have first, last name, then the name LLC1 or whatever you set up. It's completely wrong. And if any one of those rentals gets hail, all of them will go up, so will your personal insurance. Rentals, investment properties, whether commercial or residential, should be on a commercial form, meaning the LLC is the only thing that's on that insurance form. You should never be named on that. These are how people get hung out to dry and where their business insurance doesn't kick in or it's not actual real business insurance. It should never say business liability. It should say commercial general liability. Class code, here's how it's classified. That's how you know it's real. So again, this was Business Insurance 102. If you have not seen Business Insurance 101, check that. Not only do we have these both in long form, which are about 20 minutes. We also have these broken down by subject matter, a general liability section, a business personal property section, etc. If you're interested too to dive deeper into the investor side of landlord dwellings or commercial property, we have an entire real estate investor library on here for you to look at these as well. So I appreciate you taking your time out to learn. That is why we have this university.